Yo, guys, how are we? Right, let's see if this is all good. Hello. Yes, we're good. Let me know you're here, please, if you're here. I am trying to now, very unprofessionally, get the chat box working live. Let's see if it works. So I'm just going to add some stuff and then we're going to get into it. So apologies that this is now going to be what you're watching while you're waiting, but let's see if I can get it to work. And no. Okay, I'll do it another time. So let's run into what we're going to cover in this video. We're going to run through, obviously, Bitcoin, Ethereum, Solana, and hyperliquid, and just go into a little bit more detail than what I went through earlier today in the morning video. And then I'm going to talk about how to use different timeframes to trade ranges, and then going to answer some questions which I've had from like DMs and chats with people who just kind of want to know a little bit more about my trading. So I'm going to talk about that as well. Just very quickly before I do that, and thank God for the people watching this back in a replay who have timestamps, hey? So I just want to see if I can get the chat up. There we go. So yeah, if someone's here, please let me know. It says I've got over 100 people. So if someone's here, just please say hello and let me know it's all working. We're going to run into it. We're going to start with Bitcoin. And here we are on the 4-hourly time frame. So I'm not going to remark all of the levels. You can watch the reasoning for that in the video this morning. But I will talk about them, of course. So we had the range high here and the range low there on Bitcoin. And this is what had been holding price up for a very long time. And then the end of the chain was here. And then obviously it gets faked out and then price comes all the way down to below where the buying took place to push up to 82K. Toby's here, Cat Patrol's here, Dave Murphy's here. What's going on, guys? So now it's a question of, is it going to continue the move or is it going to retrace, right? And if you're looking for a higher time frame area of liquidity, I would say down here, which is what I've been talking about for quite some time, at 52K, which is where the buy-in basically took place to put the all-time high in. So I'd imagine that's a pretty strong target. Even if it breaks it, it makes sense for a meaningful reversal to come at this point, in my opinion, which is why I think things are going to come a little bit lower. So where we're at the moment is that it's broken below the range low and it's found resistance at this supply zone here, which is sitting on the break of that range low. So that's significant because instead of bouncing at the range low, it broke through it. And this is kind of where the selling took place. But then above that, we have a more significant level because this is the end of the chain. Now, I always say that when you see a compression like this, particularly in a trend, you need it to go. You need to see the compression and then the impulse away. This is when you start thinking, right, we're going to come to either one of two areas, basically the mid-range of this compressed channel or the very extreme of it where the deepest liquidity is. So I'm at a point now where I'm not sure if we're going to keep dropping where we're going to turn from, whether it's going to be at this point here or this point here, or maybe somewhere in between them. But I'm in lookout mode for reversal pattern. I think shorts should be the directional bias you take this week, and any rallies that you see, look for the signs of exhaustion and then look to short them. I think that's, pretty obvious why. But you have to consider the fact that we are definitely at lows, not yet hit the higher time frame target, which gives me confidence that we can still catch a decent continuation here. But have to be wary of the fact that it could be a deviation or a fake out or whatever you want to call it of the higher time frame range, and that we're going to come deeper either to the end of this chain, similar to kind of how overall that's what the price action did on a 4-month basis, came right up to the extreme of this chain. So you got here you had the compression and then the impulse, and then it comes all the way back up to the extreme of it. So similar sort of concept potentially in this scenario, and then it comes down. So I'm looking for something like that really as a worst case scenario for a short, that this should be the level to hold it down. But I'd look for that pattern on a lower time frame and look for a range to form at key areas. So this is kind of the mid-range of that compressed area, and this will work out if the market is really weak and if it's going to just keep sending to the downside. In that situation, then this level should provide us with an opportunity on this time frame to drop this week. That's if the trend is really quite strong, and it looks to be, right? And a lot of people are losing hope and getting the memo to be bearish. Or if we're just like, the market needs a little bit of relief after falling nigh on 25%, it would make sense to expect some sort of ranging here and be held down sort of at this point at 68k as the high, and then the low down here at 59k, and then maybe we just chop around for a little bit until the market maybe does similar to what it did before and then drop down again, because I still believe 52k will get hit. So I'm looking for some sign of reversal here, and I'm not seeing yet. This is kind of what I would call a B grade range. It's not really that great, but in a strong enough trending environment, at a shallow supply zone, aka resistance, you look for those shallow pullbacks, and you can kind of forgive that sometimes the price action isn't perfect, but the momentum to the particular way, the particular direction that the trend is moving in, you can throw a lot of confidence in it. So that is potentially why I'm looking at something like this. I'd like the highs to get spiked and then look for a breakdown. But ideally, given the fact that excuse me, given the fact that markets range more than they trend, and we've had a big trend recently, it's kind of a bit of an unexpected thing to have that then do it again, but again, we could expect that because we're coming to the end of the bear market. Historically, this is kind of the time when it's about to form a bottom. So we might get a capitulation event, or it might just grind down like a compression and not be able to do a capitulation, and then, spikes up and then reverses. It can come in a number of different ways. But at this level, if the strength is there, you can find something, even though it was not perfect. But I'd prefer just a little bit higher to really see here, for example, the exhaustion, and then look to trade short the next swing down. Very similar kind of manner to how I caught the last one up here. Right, you see the move gets exhausted, tries to impulse away, puts in lower highs and lower lows, and then comes back. So I'd be looking for something like that now down on the lower time frames. Around this point would be fine. Like I said, if it happens here, that's fine, or if it happens here or here, that's fine. Just want to look for the signs of exhaustion, maybe like that. We get just a channel, failed top, and then go. Be looking for something like that basically for the week ahead. It might not even be this week, it might be next week that it forms. But these are the times where you need to be the most patient, because we've obviously had a pretty big event on the charts in terms of how much it's dropped. And people are now going to be more trigger happy to hit the sell button, which forms liquidity the other side, which see some relief and a squeeze, which we might be going through now. We might just get a little bit of chop again before people provide enough buying liquidity, enough confidence in there to be a low, that they provide a pump that ends up getting dunked on, as we saw on the higher timeframes recently. So yeah, that's kind of where overall I'm at with Bitcoin. I don't think there was anything else I wanted to say there, other than the fact that it might put a reversal in, but I'm just not too confident of that. I'm just not too confident of that. But the choppier it is, the more likely it is it's going to come deeper. But if it starts getting an injection of volume, it should go a little bit sooner. And that's what we want to see. If you're bearish, you want to just see this move keep going. Don't really want to see it stall. And I think anyone who's long wants to just see this get it over and done with as soon as possible. Let's end the misery of the bear market. Let's all start building for the next few years. Let's all start getting our buys in. We just want to get to that point as quickly as possible, right? But I think we could either see this go quite quickly, or unfortunately might end up looking like a couple of weeks of chop before it drops. We'll see. So Ethereum has dropped quite significantly out of the range. Very nice range that formed on the break of key demand. This is where the buying took place to create the all-time high. And then the end of that swing, the end of that chain, this is where the buying took place for the entire swing. And it's coming back down to it now. Hasn't yet hit the very extreme, but it's getting close to it. And then on the bottom of that range low, very similar to what I was just talking about on Bitcoin, you've got the compression sitting at the range low, which gives it significance. And then you get the impulse away. So if this market is really strong to the downside, again, you've got two places it's going to bounce from, either the bottom of the compression or the top of the compression, or the part, where the impulse came from, which is here, which is just basically at the bottom of the compression anyway. So it makes sense to look for the downtrend, the impulse, and the momentum to keep following through on a retest, because we know there's liquidity within this zone, because we can see from this zone we saw a huge drop. So on a retest of it, we can expect volatility. So if this market is weak, which I expect it to be, I'd like to see it kind of drop from here and then continue. But again, like I said, we might chop around for a little bit. We might look like we're going to go and then build to come back up. It depends on, what kind of price action we can expect over the coming week or two. I'd say 2 max. Because the more it stalls, the more likely it is we're going to see a retrace. But if it comes in deeper, I'm very happy to look for a reversal there to head back down. And I don't think it would look too bullish until it breaks that level, that compression, changes the market structure intra-week on this time frame, and then build to push up back to the range highs, and then look to try and flip that. So that's the opposite side of what I'm looking at. But using this compression, it has significance because it broke this range low at the start of this compression, rather than respecting the support at that point and pushing back up. So we know there's a lot of selling liquidity there. So they're the levels I'm looking out for on a higher time frame this week ahead. Again, I'll be looking for those patterns to form probably on the hourly time frame, and that'll be like up here, or somewhere in between them, because this is all, like I said, the compression. So it's all a very significant area to look for momentum to push in the original direction, because there's enough sell-off here to fuel this move. So you would expect the same type of move to the downside, and likely, because the buying liquidity got taken out at this point, you'd expect it to go lower. So that's why I'm focusing on those levels. But yeah, it needs to do a little bit more work to get involved, to get me involved. But that's kind of the outlook for Ethereum. I think everything makes sense to be short biased. I don't really think that's too much of a bullish reaction so far to warrant, putting your net worth back in to say this is market bottom. But overall, I mean, I wouldn't buy ETH spot long term to hold, to be honest. But overall, like, it's coming to a pretty good area to, if you are that way inclined, to scale into Ethereum over the remainder of the year. So on the next drop is going to, whether you catch the exact bottom or you catch a zone just like that, you might get a buy here, you might get a buy here, you might get a buy here. That's going to be a great area potentially, if you trust it in 3 years, 2-3 years, that it's going to be a lot higher. And even though you didn't catch the Pico bottom at $900, you got an average buy or an average entry at about $1,200. And when it's $3,600, you won't really give a shit that you didn't catch that $900 price point. So it's coming down. I don't think this reaction so far is bottom forming, but it certainly feels like we've moved a shit ton, and it makes sense to expect a little bit of a breather before potentially at least going for the lows again. May not necessarily break it, but it will. I expect those lows to at least get tested again. Also, my TP for my previous longs was at 1750, so it might use my TP position to mock me and send the market lower from exactly where I closed. So we'll see. Solana on the daily time frame. Let's just clean some of this crap up, which you know what I'm going to talk about now. This is a spoiler from this morning's video. But it's basically using the exact same concept, which I've just talked about in terms of the compression. So we have this really big range that we're put in for the whole year. We have it sitting basically at the break of a big low, which gives it significance rather than just like randomly being in the middle of a swing. And if you want to learn more about that, go on Kraken's YouTube channel, where I talk about price action zones, where you don't want to catch the middle of the move. You want to catch these breakout points, the extremes of these ranges, which we're going to talk about more in next chapter. So the next area of liquidity for me is right the way down here, $50, which I've been very vocal about for a very long time, it seems now. So I feel like that might be more of a sense that even if it's just a spike or ends up building a range here, I feel like that's a good place to target for shorts because it's the deepest part of liquidity of that demand zone. And then if we go to H4, we've got this big area of compression, which you can't see too well on this time frame if you've got a bit of an untrained eye. But you can see the way it's moving down is very zigzaggy rather than where it like rounds off and hooks down and just completely nukes. Doesn't have that. So using the same concept, if we go down to the hourly time frame where you can see it, we have a downtrend. We have this very compressed channel, and then we have a breakout of it at the moment. So it's going to do one of two things. It's going to either react from somewhere near the bottom, or because this would be a failed breakout in that sense, or it's going to come to the deepest part. Oops. I've not got the dexterity for this right now. This is actually ridiculous. Or it's going to come to fuck's sake. Sorry. Or it's going to come to the end of the channel, and it's going to look for the liquidity there, and it's going to put in a reversal pattern, ideally, to short back down. So that's at about $75, $77 at the top. So I'm looking out basically for either of these two events, and it's either going to be that it fails to push up to any part of this zone and then comes back down, and this will be the level, the origin of whatever move we get to the upside. Therefore, if this level breaks, even if it's next, even if it just sinks from here, it's going to confirm the bearish market structure, because it's then made a lower low after making higher high attempts. And then at which case I'd either look to chase it or get in on a retrace to short down to that $50 level. But like I said to my subscribers, which you can subscribe to by hitting subscribe on my profile on X, the risk reward is shrinking. This is not the best place to get into the trend with size. So I think that any position I end up chasing, particularly if we get a continuation rather than something like a big reversal, I'll be looking to reduce the risk on that, just because there's not as much space for it to run into, and there's a higher chance that we're going to get it doesn't even get there. It may not even take these lows, for example, if I'm short here. So a lot can kind of go wrong at this point. So I'm just reducing the risk now. I had my heavy positions from a lot higher up, as I documented publicly. And yeah, I think that's a better approach now, because you've got to be bearing in mind that we are coming into the end of the market cycle. And then we're going to, at some point in the next few months, we're going to enter an accumulation phase, and it's going to be better to just like put trading aside for a little while it chops around, and just focus on building. But it's coming to that point. We're closer to that than now. So yeah, I'm just exercising a little bit of caution with the risk, for the fact that that has happened. And we've also dropped like massively over the past couple of weeks. So it, again, it goes back to the kind of psychological side, where you have to think, well, a lot of people are going to be bundling in short here and catching on. They're going to be great exit liquidity for shorts closing, or even just to take people's money, build their confidence in a retrace, and then dump it back down on them. So we're kind of at that point. So it makes sense just to kind of scale back a little bit. But yeah, those are the two levels on Solana that I'm going to be eyeing, and the two plans I'm going to be looking for. If it flips 77, I'll be surprised. I would like to see that, if I'm bullish, I would like to see that do it a lot slower, kind of build and then impulse up, like a compression, then an impulse up, rather than kind of a quick move up, because then I think you've got obviously a news-driven event, and those things usually Bart Simpson back down. So that's how I'll be looking at Solana. But if it does get broken convincingly, then the market structure changes and we can start looking bullish. But until then, it makes sense to look for shorts, in my opinion. And finally, we've got hyperliquid. So we've got a couple of key levels, actually. So we had the previous all-time high here, and then obviously big sell-off, retrace back up to it. And we have a push up, a second push up, a drop. And then from this point, the buying creates the higher high. Then we get a higher low. If I just draw the actual entire level, that would help. Here's the concept. This is a good concept to remember, right? This is the origin of a move. So it pushes up to try to take out the resistance, the all-time high, twice, fails. So we know like there's a hard rejection here. And price at this point in time is attempting to make a new all-time high to break this big resistance barrier. So we know whatever origin of that move breaks it is going to be a very key level. So this is a very key level because it puts this higher high in, and then you can see when it comes back down to it, bounces off the top and then creates the all-time high, and then it comes all the way back down to test that level again, and has formed this range, which I'm using as my map. And then we have just above it, this is beautiful price action, by the way. If I had to nerd out on price action, this would be the type of price action I'd nerd out on. It's like, it's super clean and clear. I just don't know from a personal point of view if I'm bullish on hyperliquid long term. I want it to come down so I can buy it, but I'm not confident in how high it can go for the remainder of this cycle, because I just don't know it well enough. It may be like a different thing that's kind of immune to the rest of the market just nuking it at the moment, or it's just lagging behind and then it's going to dump eventually. I'm not really sure. But in terms of like trading it, I'm just watching how things move. We have this support here, which is a continuation level after breaking the other higher high within this sequence. And this is the edge of the supply zone. And then we have the origin level just below that here, where the buying took place to create the new high, similar to this level, and fuel this move. This is all just a reaction to this lower level though. So at this demand zone and this demand zone is where you want to look for your reversal pattern. Similar, well, actually just like the inverse of what I was saying on the previous 3 coins. The price comes down, ranges, tests the high, higher low, and then with strength pushes out of the range and creates a sort of W pattern. So now I'm looking at this as either a signal of intent from the market or it's going to be a failed breakout. And what I would like to do is wait for it to come down to the range again and then look to push away. But it would only go as far as here, my TP. So I'm not sure the risk reward is there. If I'm confident this market is going up because I know the fundamentals better, I'd probably be more inclined to hold through that. But I don't. I'm looking at crypto as a whole, and it's all coming down. So I expect this might as well. It kind of looked like a top pattern. The sentiment kind of felt like a top. So at this level, this continuation level, and this origin level, fueled the move up. So when they break, we look to the source of that break, and it's here. This is where the sell-off happened. It bounces, retraces, and then the sell-off comes back down. And don't forget how bullish everyone was at this point. So we know this is holding the market structure down, but it wouldn't get confirmed bearish until this previous origin level is broken. And it doesn't yet do that, but that's what we want to see if you're bearish. So now it's kind of like a game of ping pong. It's like a game of pong, and it's just gonna like maybe range between these 2 points, but this is the top of the range and this is the bottom of the range, and we're in an uptrend, and the market structure to the upside, the bullish market structure, hasn't been broken. So you favor this as a higher low. You need to be careful there in case it looks like a dick. You would favor it to break this resistance, and then you would either look for a continuation pattern on the break of that resistance, which is basically just, in supply and demand terms, a rally, a base, and a rally. And once you get that rally out of the base, you either wait for the retrace or you just mark it and try to chase it. So you'd be looking for that there, or break the level, retrace to somewhere important, kind of like what it's doing now, and then going sideways and then breaking out, and then you chase for the next higher high. And then that is how you just trade trends, and then you can just keep trailing your stop under each base that forms along the way. So that's what I'm kind of just watching out for. I'm neither bullish or bearish on hyperliquid just because I haven't been looking at the chart long enough. With the other 3, I've been looking at them for a very long time. So I know how they move and know how kind of what to expect with those markets. But with hyperliquid, I'm not too sure. Like I said, I'm still bullish on it, a higher time frame, but right now I'm not sure if it's going to collapse, in which case I'm looking for shorts. I'll be looking I know exactly what I need for that. Also, I know several scenarios, like I've just said, where I can look to get long if this level breaks. But I'm just kind of waiting now for price to tell me what it wants to do. And this is essentially how you trade price discovery is you wait for the price action to go sideways and then push up and then get retested. And then you use that point to tell you, is it going to push above and hold it, in which case you can start looking for longs out of it and the trend is intact still. And that's how because if you're in price discovery, right, you're looking at this moving up and you're going, how the fuck do I get in here and define my risk logically without experiencing something like this? And it's to wait for, as hard as it is to wait for the retraces down to sideways areas. So that's really what I'm looking out for. It'd be on the hourly time frame. I've got the significance of the levels on the 4 hourly time frame. But this is looking strong. It's looking bullish. You have to. I'm more bullish than I am bearish. But it might be like this, for example. It compresses up, impulses to break the level, and then comes down to at some point in this compression. Then I'd look for my reversal pattern to get long. And then if I don't get that reversal pattern and it collapses through, then I start thinking, right, the next level might collapse, and then I'll just look for a continuation or like a retrace after a continuation. So you just, with that method, you've just got to give it as much time as possible in order to give you the right information that things are changing. So yeah, that's that. PyQuest is here. Hello, mate. India person says, hello, I am Korean. Okay. Good night. Bearer PTSD is here. Hello, mate. Gus, do you think it's possible to wait for $30 for hype? I kind of am. So we'll have to wait and see, right? I wouldn't be surprised to see this be retested at some point in history, whether that is going to be like this or it's going to end up going like this. I really don't know, but I expect that level to be retested at some point. But I'm basically focusing most of my attention on Bitcoin for the rest of the year in terms of allocating capital to it. I think at this point in where Bitcoin is, whatever lows we get are probably going to be the most affordable lows that we may ever see again. So I'm just trying to get as much money over there as I can. And then I think you should have 90% of your portfolio in something like Bitcoin, not something like Bitcoin, in Bitcoin. And then because it's the king, it's what it's going to do, and you can see all the good fundamentals around it in terms of adoption. You don't want to bet against Bitcoin, and I think it may not be sexy to say it might only go up 4x over the next 3-4 years from that low. But I bet if you looked at where you were 3-4 years ago on your trading account, you'd probably have been better just putting the money into Bitcoin and then holding it versus what you probably did do. And I don't mean that to be disrespectful. I've been there. But it's, I think, wise to do that kind of allocation. And then when you've got things like hyperliquid where you can get the sexy gains, but they're going to bring out the hardest behavior in you to correct. You're going to have a lot more emotions riding on it, particularly when it's like ripping. You don't want to sell. It's easier to round trip. It's easier to like buy all the way down and then just keep losing money. Whereas if you've got something that moves kind of steadily alongside it, it kind of absorbs the losses, but because your losses are so much smaller because you're allocating less to the riskier options, your wins massively outweigh the small losses in that scenario. So I would like $30 on hyperliquid. I don't know if it's possible. I'd like $16 really. That's the origin of the entire thing down here. That would be sick. But I don't think at this point I'm going to get that. It would look very bad for hyperliquid, but it might get manipulated to come back down to then get bought back up. That's kind of what you see at the end of the bull markets. And I think that's kind of what we are seeing across the board, but no one's just really saying that. It's, it gets manipulated. Well, probably people are saying it, but it gets manipulated for bigger entities to then buy back a lot lower. That's how supply and demand works. And this is a very immature market, and it's a lot easier to manipulate. Look, the kind of people that are manipulating Bitcoin now are Saylor and Trump and different countries. Back in the day, it was people like Arthur Hayes and CZ and people who were owning the exchanges. And that's kind of gone out of their hands now to something bigger. So I feel like even this might be super bullish, it might come back down first before we get the next big highs. So yeah, I would love that exposure, but we'll see what happens, you know. I know the Bitcoin market a little bit better. Okay, so I just wanted to do a quick, as the next part of this stream, just a little educational bit. I like to make these streams as educational as possible. It's not just for price points. I'm trying to give you the logic behind them. So this part is about trading ranges within different time frames. And this has just caught my eye as I was looking at it now. I haven't planned this at all. I probably should have. But if we have a range here, then we'll define our range where you have an uptrend, you have a base, and then you have a breakout to tell you whether that's a demand zone, or you have a drop, you have a base, and then you have a drop to tell you if that's a supply zone. Again, little plug for the Kraken video. It's on my timeline, and you've got this entire concept laid out. So here on the daily time frame, what we can see, if we're trying to make a decision at this point, what we can see is that we're in an uptrend, and what we want to do to take advantage of that uptrend without catching the top, because we might go, oh, it's going up, you know, so I'll just buy, and you might have to survive a downtrend, and then ultimately pushes up, as it kind of did, but you might make loads of bad decisions in this point and actually end up losing money. Whereas if you just bought and held and waited and trusted the trend, you would be quids in. But we've got an uptrend, and what we want to do in order to get in is wait for price to come sideways, because that's when it ranges. That's when the buyers and sellers are met and they're evenly matched, and the market is undecided at that moment whether the trend is going to continue or it's going to reverse. It's going to reverse, it's going to break to the upside, or it's going to look like it's going to reverse and then continue up, or it's going to look like it's going to go and then reverse. So if you are in an uptrend, you would favor the top of the range to break, look to get in on a higher low, and then either chase a higher high or buy down there. So if you're trading like here on the daily time frame, and you're expecting this high to break out as it did here, you can now drill down to the lower time frames and look for the exact same pattern where it pushes up out of a range like so, and get the exact same type of trade, but on a much lower time frame for higher risk reward. So we have that at this point. Again, I haven't looked at the lower time frames here, so I'm kind of what do you call it, freestyling here based on what we're seeing. But if we read the range on this time frame, it tries to take the lows 3 times, pushes up, breaks the high, tests the low, and then breaks out to the upside, and then one final push into the range, and then up and away. So we know at this point price is going sideways, in hindsight, of course. But if we're looking at the range high, we know on a lower time frame it should give us some sort of continuation sign that it wants to break up to the upside. So if we go down now to, I reckon, H2, we can see a couple of things. So this is how I would generally mark it. So price comes up from the lows and then puts this range in at the high, and it's a big one. It comes down to confirm. Let me just reverse it back a second. So the way I mark ranges is I'll wait for a trend, I'll wait for a retrace, and then when this high is hit, it confirms the range for me with that low, that very first low, as the range low, and then I wait for price to move sideways and then break out meaningfully in one direction. I usually wait for two confirmations of that. So you have your signal of intent, you have your high low, and then you have your real breakout. That's what I usually wait for, because as we can see here, you can get caught with your pants down very easily. So that's how I mark things, and that's how I've marked this. So price comes up, forms the range, because you can see it puts the trend up, puts the low in, another high, and then when it comes all the way back down to this area where the buying took place to create the higher high, breaks down, and then comes a lot lower with a lot of strength. If you're looking to short this now, based on that one breakout, you can see we're getting broken to the upside. So you can look then that price comes all the way up, back up, because you haven't got your confirmation that it's coming down, takes the high of the range out, comes back to the mid range, creates a high low, and then breaks back above it again. So you could trade this in several ways. You could take this low, maybe around the mid range, and have your stop below the range low and get quite a big trade like that. It's harder to get those trades because you're going on with less confirmation. But in a trending market like this, it's very clean, which is what I was saying. Versus, on the higher time frame, where were we? Down here, you might not get that breakout, and using the exact same principle, get the breakout above and using the stop below the range, you've got like a 1.32R move up to the next resistance, whereas doing it on the lower time frame, where was it? It was here. Same principle, use the breakout, second breakout above, below the range low, and then you target the next resistance, and it goes up to a 2.85R just by switching time frames, but using that higher time frame to give you your direction, give you the pattern that you're expecting. You could, just to give you another option, you could use that as the range. But for me, it because it's got the support so close by, it makes more sense to use that all. And it's been quite wide. It's just a little bit more difficult to read. But also on top of that, this 2 hourly range, we can go down to M30 and we can see yet another range that has formed. So price pushes up out of this one and then goes sideways, tries to push up, comes to the lows, and then breaks out to the upside. So again, you've got another range on a lower time frame that when it breaks out, or it gives you this breakout signal, and you can go halfway down, expecting the range to hold because you're in an uptrend coming out of a higher time frame range. Use the range low, survive it just about with a bit of squeaky bum time, and then you've got a pretty good risk reward trade, which looks great. It looks flashy, but again, like I said, it's harder to get those types of risk reward. You have to have the right conditions, which we are experiencing, but you also have to trust that the move is definitely going to continue and you're not going to get tagged out of the lows, and you could chase it a couple of times. So you might take a few hits before you get that higher risk reward trade. But that's how you go from like a daily time frame to seeing multiple different, and then like even at the breakout of this range here, you can see we've got some sort of little cluster there. So if we go down to M5, if it's going to let me, yeah, it's just about. I'm a cheap ass, I don't have trading view. Again, you've got a little bit of a range that has formed here. So just change the color. Hopefully you can see that. We've got the range that has formed there at the top of the other range, comes up a couple of times, breaks out, retests the low, breaks to a higher high, and then goes. So you can just keep doing it over and over again. And then you could probably, I would definitely not have the 1 minute data there. But you could go even lower than to that, again, that previous range high. And you could probably see on M1 some sort of sideways movement. And again, the same pattern that keeps going. So this is why I focus on ranges, horizontal ranges. This is why most of my market outlook is defined by them and where the buying and the selling took place from them. So when you get to those areas, those key areas where price has to make a decision, you can normally trust the breakout in lines with the trend. Yeah, those are pretty good things to look for. All right, I'm going to some water and answer a question. Toby says, thoughts on ZEC? I haven't actually even looked at the chart, to be honest. I know a load of people are talking about it. Oh, this is tough, right? So I just remove everything. You've got the high here. I'll just use the very top wick, and then I'm going to use the next wick down just as a kind of map starter. Hasn't yet been hit. Comes down, creates, again, same concept I was just talking about. You've got this range. If I just mark it like this, and then sitting above that range, we have another one that just breaks out. So this is all the end of the chain here. Well, actually, the end of the chain's down here, which has not been hit. Going back to what I was saying, if you've got a compression area like that, and then you get the impulse up, like I said, you're going to look for the extreme or the deep part, and also the mid-range serves as quite a good area, but somewhere within this overall compression, you want to look for some sideways price action, and then, which is what happens here. It creates that base and gives you 1, 2, 3 breakouts, retest of the breakout area, and then goes. And then it's come all the way back down, look, to test it and wicked back up. It's the first test of it, so it's going to be really interesting to see if it's got enough strength to push and create a new high from it, or if it starts coming back down and breaks this point, it's not going to look great. It's probably going to look pretty topped. So if we look to the, again, it's just all a big range, right? So if we look to the range low point here, even just as a quick level guide, comes down. This is the area where price made the decision to break the lows, if you like. It is where the sell-off kicked in to break and create a lower low. So I would say that's the end of this chain here. And it's doing what I keep talking about, is it's compressing, and it's either going to impulse down to follow the trend or impulse up, and then you've got a straight into key supply, and you've got to say, right, is it going to put in a reversal pattern, or is it going to break out to the upside and continue bullish? So that's what I'd wait for as someone who doesn't trade this chart. Or it may impulse to the downside and then continue this sell-off. But it's kind of in the middle of nowhere at the moment, and I would say the areas to focus on, you've got this high. Obviously, it's the first high that was created after bouncing at that range low. And then from there, you have this point here, which is where the buying took place to create a higher high. So we know that there's liquidity there. So I'd basically wait for one of those two levels, 540-ish and 380-ish, to tell me if you're bullish, you want this level to hold. Otherwise, if it breaks it, it's a great point where the market structure breaks to the downside, and then you can look for shorts on continuation or a retest of it, or look for the exhaustion of this move somewhere up here at this supply to short back down, or wait for it to break and then get long. So I don't trade it, but again, it's the same thing as Solana, not Solana, hyperliquid, where I don't know where we are in the market cycle with it. I look at it as Bitcoin and altcoins. It's an altcoin, so I expect things to maybe put exit pumps in and then drop down and follow the rest of the market. But I'm also aware that my view on that kind of way things move in that way a little bit outdated, because I think the market's very different these days compared to like last cycle even. So things may move a little bit differently. Like hyperliquid is a bit of an outlier. It's been pumping while the market has dropped. So I'm not sure if Zcash is as well, but from historical points of view, I would say it probably is going to follow the rest of the market, and it's just waiting for the market structure to break and tell us that. But so far, bullish market structure is intact, so you would favor support to hold and trend back up until you get, the market structure breaks intra-week there, but on a higher time frame below this low especially. So could look for a short up here, but I would say I'd follow the momentum and trust that it's going to be bullish. If you get a long setup, for example, and you feel that FOMO, you feel like I need to buy and I need to chase this because it's definitely going up, maybe just pause, maybe just wait a second and wait to see if your stop loss gets hit, because that could be a sign that the top's in and you can short when your stop gets hit and then maybe ride a trend down. Right, last part of this stream is going to be some questions that I have, mostly from, because I didn't source them, I should have sourced them, mostly from Ahmad, who is helping me with cutting clips and my social media a little bit. So he's got a few questions for me, and I'm going to just run through some answers, and hopefully it helps you guys. But I'm not going to go through all of them questions because he sent me 9. So question 1 is, why did you decide to go full-time as a trader, and how did the shift happen? I've probably got a little bit of an abnormal story in that regard, because one of the things that I always struggled with years back was, how the fuck am I going to get this to be my main source of income? How can I get enough capital together to be able to trade meaningful size that pays all the bills, gives me walking around money, gives me money to like go on holiday and stuff, but also keep my account growing? That was always like a really big struggle. You don't really have that these days with prop firms, because you can go and get a 100K account for $500. You can get your money back when you pass it and get your payout, and then you make payouts with it, and it's become easier these days to make like a full-time income on it. But it also comes with a lot more stress and anxiety, because you're putting all your chips in a very volatile basket. So I mean, I'd always loved trading. I got into it on the 2008 2009 financial crash. I've lived and worked in finance since, not in like actual trading roles, but within those environments, and just have always had a bit of a passion for it. And then I went full time because I didn't really like my day job, of course, and trading is my passion, as I said. Made an education group with Tyler and Maine, and got a decent amount of money from that. And that allowed me to walk away and go full time, away from social media, and just focus on trading. And that basically happened because the group broke up and we all went in different directions. And I just decided I'd had enough of social media at the time, and I'd quit my job to do the education group and trading. But when the education group had gone, I had enough capital behind me to like absorb some of the risk quite comfortably. But I found problems with that was that I had way too much time, and I had this kind of like hustle mentality where with the education group we would like operate in 12 hours a day most days, and that took its toll. So I had this big mentality, like you have to like work hard and all the time, and when you go full time you have to realize that you've got way more time than you'll think, and it's harder to manage that. You have to fill your time somehow. I eventually moved down from swing trading to 1 minute time frame trading, and that is where I was stuck. Well, I stuck with that for about 4 years and then had my son. But yeah, like it was a bit of a random shift, but compared to like what is replicable. but it'll be the same in anything. Like if my battery's about to die as well, but it's going to be the same as anything really, that you need to build a chunk of capital, and then eventually you'll just feel right, like you're making enough money compared to your day job that it makes no more sense to be there, and you feel like you're in a good place. Same sort of story as that really, but mine just happened to be the thing that allowed me to have enough capital to trade bigger, was having an education group, having good investments in Bitcoin as well. So yeah, it's not the most replicable format, but I think, and I try to encourage people as much these days, get online, create content, and just create the raw truth of content, and you'll be surprised where you can get with it, and it can help you get into making money within the trading field that isn't necessarily on the charts, and that can fuel an improvement in your chart work and your trading. So I would say do that as well. What assets were you into in the early days, and what do you trade mostly now outside of crypto? I first got into stocks in like 2013, which lasted like 2 months. Wasn't good at all. And then I did Forex trading from 2015 to now. Basically, I still just trade that. And then crypto higher time frame. I'm in the middle of a juggle with that, rejig with everything. But in terms of my investing, it just went like Bitcoin. Like I got convinced enough by just Bitcoin. I became a maxi like immediately. I of course made money on some alts. I lost a lot of money on alts as well. Too much money. But yeah, it was mostly just that. And I'm now going to be making a shift into stocks over the next year or so. Come full circle. Have you ever traded on prop firms? If yes, and take me through the journey. Yeah, I have been trading with FTMO since 2020. Maine actually told me about them. And I had gone, like I said, a period where the market was moving quite a lot at the end of 2020 and beginning of 2021, sort of mid 2021. The markets were great. And I was able to like make not massive payouts, but enough to like live my life, like pay my bills, have a bit of money left over and stuff. I wasn't necessarily growing the capital, but I wasn't having to dip into savings with it. And then I moved to day trading because the market changed. It became less volatile, didn't have as much volume. So I switched to day trading to get similar opportunities, just on a lower time frame. And I've gone through losing loads of accounts, having loads of accounts. The most money I had at one point was 350K in funding. And then that was with my Forex funds, and then they closed and I lost, I'd lost 150K in funding with them when they closed. I'd lost 350K in funding before, for a very stupid reason, was that 5 or 6 of those accounts were 50K accounts. I think it was 5 of them. And then it was like a couple of 20s, a 10, something like that. And because I was trying to build as much capital as I could with it, I went on holiday at the end of that like period where I got all those accounts. And the accounts I'd got at the beginning of the month, I forgot to put the trade on them to keep the account open. You've got like a 30-day rule where you have to take a trade, right? Otherwise they close the account. And I lost, I think, 4 accounts in that 4 50K accounts. So I was like down 200K or something in funding. And then this was like September-ish 22. And then that's when I realized they were all like full of shit, because I was saying to their support, you've got on your website that you want to help your traders grow and you want a long-term connection. Well, give me my fucking account back then. And they were like, nope, we can't do that because you broke this rule because you weren't there, and your email went into spam. Doesn't matter. If we change it for you, we have to change it for everyone. I was like, you guys are full of shit. So yeah, then I lost it, everything like the year later, when they closed like 150K in funding. And then I moved, like I'd had my funded FX as well. Like they had to eventually move me onto C Trader, which I've never traded with. And then I sacked that off because it wasn't MetaTrader. And then they went down. And then I had a very bad trading year last year where I was trying to day trade, but like amongst a load of other stuff which I've documented on my X and my YouTube. But it was very inconsistent, and I've since realized in February that I'm just better to day trade it. To swing trade at the moment, considering how much work I've got on my plate, and it's working better. I currently have got 200k in funding with FTMO, and I'm hoping I'm going to get that extra 140, 150k in funding back from my Forex funds in the next couple of months. But I haven't ever really gone super hard with them. I've always kind of focused on trying to like make them last longer and increase the longevity of them, and risking lower as well in order to try and keep them. And I think once you've lost a lot of money and you have to rebuild it back up, you kind of have a bit more of appreciation for the money. And I traded it in periods where I had a lot of money and just like lost counts without caring, buy a new one, pass, lose it, and not really think much about it. But now, like nowadays, after having gone through a cycle of like having a lot and losing a lot, having to rebuild, I found myself actually, you know what, if you do a financial audit on yourself, you'll realize that how much money you waste, and how much money that like even just $250 a month can help you. But it doesn't sound great because everyone on social media is like, yeah, I got 50 grand on my accounts today. But like 250 could be like quite a big like bonus to your life. So once I realized that you took the ego out of it and you reduce the risk, the accounts last longer, and they become more reliable payments, but they can actually make more of an impact than you realize. So that's kind of my process with them. But I'm trying to scale up at the same time, but haven't really focused on them on this cycle, like this cycle down, because I like to go in quite heavy. And I think they've changed the rules on FTMO where you can't take big trades now. Like if you wanted to do like a 4% trade, for example, they'll close that position, or they won't honor it because it's not in keeping with how you normally trade, something like that, I think, anyway. Now, as you have shifted to swing trading, how do you take profits to manage daily expenses? I'm not a full-time trader, so again, on my YouTube, you'll see it, and I talk about all the time. I have a graphic design business, so I that's basically where I live off of, and anything I get from trading is basically like it might be used to make some improvements in the house, or I might save some or something like that. So most of my income is just from my graphic design business is used to fund my life. So yeah, I think swing trading is going to be a much longer term thing, and look to build several accounts at the same time. Use higher risk where possible because I'm getting into higher time frame trades. But yeah, it's I use the same methods as M1 as I do on H4 or the daily time frame to take profits and to get into trades. As you were good with day trading / scalping on M1, M5, what strategy would you suggest for me for prop firms if you can? If you're day trading on M1 or M5, again, it's all just what I talk about. It's just ranges at key levels. Find a key level, find price ranging at it, and then follow the breakout. Either way, that's kind of just what I do. And I use the other side of the range that I'm trading from as a stop loss. So like if we see a range here, for example, on Bitcoin, and it breaks down, I just look for the breakout of the range because it's in line with the downtrend and it's at a key level. And then I'd use my stop above that and then just expect it. So yeah, it's the same thing whether you're trading on M1, M5 or daily time frame. Same system. How to gather conviction on my trade ideas and trade setups and holding onto my positions. XO says many times that he does cut and reverse. It's fixed in my mind, but it has led me to close trades early, move stop loss to break even too early, or shift bias too early. Cut reverse has turned into flip flop. I don't really know what cut reverse is. Conviction on your trade ideas and trade setups and hold on to my positions is simply that you don't have enough reps. So I'll get onto a back tester, go back over the past 6 months of data, price action, or however you're trading, go over the past 6 months of history and back test as if it's like forward, you're like live trading, but it's obviously on the back tester, and collect as much data as possible and see what works and see what doesn't work, and examine your losers and see what you could have done better, basically. Because is the cut reversing, let's say you've got a range, let's say it's going up, you might get a short. Would you like take the short and then when it goes long, you reverse it? I'm not sure if that's what that is. But I would say that you just need to focus on one pattern, see where it shows up, how often it shows up, and get as many reps in as possible. You need thousands of reps, like, to understand something to a very good degree where you can pull out money consistently. But you need more reps, basically. Number 9, did you use anything outside pure price action for trading, like RSI, OBV, EMA, VWAP, CVD, OI, delta volume, or things like EXO charts, Sierra chart for lower time frame, order flow, and DOM ladder reading? I have not. I've had like little dabbles in them with certain strategies I had. I've never looked at the RSI, OBV. I've messed around with EMAs and VWAPs, but I found that they ended up lining up with my price action analysis, so sacked them off. CVD and OI, no. Delta volume, things like that. EXO chart, Sierra chart, I tried back in 2020 doing oil futures, and did not have a very good time with it. I didn't really like it. I thought that my current strategy at that time was good enough, and it was. So I didn't really pursue that, but maybe I will in the future. And DOM ladder reading, no, I understand it. I've looked into it enough to kind of go, I get this from the price action. So one thing, when I speak with XO, for example, when I'm looking at certain levels, he will say it lines up with something on the DOM, or the ladder or whatever, and or the order flow. I don't know market profile. I don't know what to call it really, but it will line up, and he'll tell me the story which I've read from the price action. It's a nice little confirmation. But no, I don't use anything outside of pure price action. The EMA and VWAP thing lasted probably about 2 months. The other stuff probably lasted about the same in various different points of my trading career. But no, always stuck with price action. I was very lucky that I had a friend get into it, and told me with conviction when I got into trading, just stick with this, is all you need. And I've just stuck with it and found that the more time I focus on just this one thing, the better I get at it, the better read I get of it, and all that. So yeah, that's the end of the questions. 8:10. Going to call this an evening, unless anyone has any other questions before I shut this down. Like I said, I try to make these as educational as possible. It's not just like, here's a stop and here's your entry and all this. You have to understand the logic behind the levels. It's not just that zone you market. It's got to have context behind it. You've got to read what the price action is telling you. And so the more of that you understand, the better decision making you'll have. There's some people that have talked on YouTube. August, we hear you. Big fan, bro. Or sup, August. 1890. Matt is an awesome, humble trader. Not many like him. Thank you. Ghost Charts, evening. Martin Rohak. How would you see hype price if Bitcoin keeps ranging for some time? I hope I covered that earlier on in the chapter about hyperliquid. I don't really know what it would do. If Bitcoin keeps ranging, does it mean that hyperliquid pushes up? Maybe. I'm not really sure, but it's hard to contend with the fact that it's in a uptrend at the moment, holding onto support, creating higher highs. So you'd probably look or look to expect it to keep pushing up, I would say. Are you drunk, mate? Says Exciteful. No. There's water in there. I might have had a little bit of something a couple of hours ago, but nothing to interfere, you know. All right, guys, thank you very much for joining. I hope you learned something. I hope you have a good outlook from the week ahead. Thanks to this. I hope it's helped in some way. And I will catch you on Wednesday. I've got another live stream with Luxury. Any advice for someone looking to get trading experience with a full-time day job? I'm a dad that works 12-hour days most days and just feels like I have no time. Swing trading. Yes, it's going to have to be honest. I've fallen into the same trap. My son was born 2024 summer, and I spent too long fighting the fact that I couldn't day trade, and have moved to swing trading a lot more successfully because you get more time, you get better to analyze, you get more time to manage your emotions, and you can have a consistent day where you have access to the charts uninterrupted to look at things and set things. So I would say it's probably gonna have to be a higher time frame. If you can get to the charts during the day, then maybe go down to like the hourly. Like if you can get to set after several intervals, but also get on a back tester. I use Forex Tester 5. You have to buy the data package and set it up, but it's a pretty good way to get a lot of reps in, because you can just forward play the market as if it was real time. You can get all of the tick data as well, which means it gets every little point, so it builds up as if it's like organic, rather than like flash the candles as they appear after the fact, which makes it easier to read the price action and understand things a little bit more. So I'd say get on a back tester. Look, yeah, you're gonna have to trade higher time frame. You've got no choice but that. And I would say, if you've got access to the charts, go down to maybe the hourly, 2 hourly. But yeah, you're gonna have to trade the higher time frames and then practice as much as you can on the simulator. All right, guys, take care. Have a good evening, and speak to you. Like I said, Wednesday, Luxury is coming on stream. And if you want daily updates from me, hit subscribe on my profile, and you'll get updates in video format every morning and evening, as well as in written format every morning and evening, Tuesday to Friday, and evenings on Sundays. All right, guys, take